Good day and welcome to Carnegie. My name is Mathias Carlson and I'm an equity research analyst. Today we're going to focus on a company called Rottneros, a leading market pulp producer. The investment case can be drilled down into three key points. 1. Rottneros operates in a deep cyclical environment with high earnings volatility. Hence, the risks are high and timing is key when to invest in the company's share. We think the timing starts to look interesting. 2. Rottneros' financial position is strong at the bottom of the cycle with a net cash position of around 100 million Swedish krona and an equity to asset ratio of 66%. We consider this to decrease the risk in the investment case. And 3. The pulp cycle is gaining momentum in Q1 following a stabilization in Q4. Global producer inventories are balanced, shipments are increasing and customers are finally starting to restock. The pulp price has increased by $200 or 17% since the trough in Q3. And producers have announced another $50 increase with effect in March. It looks to us as if the cyclical earnings trough is behind us, but the high cost for wood raw material is still a challenge and it remains a risk in our view. At the same time, Rottneros' share trades below the company's book value, which is a level which should offer an attractive risk-reward in our view. In addition to these three key points, we want to highlight that Rottneros currently invests in increased pulp capacity, groundbreaking packaging solutions and renewable energy, which should secure a healthy long-term profitability over the business cycle. So what does Rottneros do? The company is a market pulp producer which stands for 90% of the total turnover. Rottneros operates two pulp mills in Sweden, Rottneros Mill and the Vallvik Mill, with a total capacity of roughly 360,000 tons per year. Rottneros Mill produces mechanical pulp and the Vallvik Mill produces chemical pulp. Most of the production is delivered to Europe, which stands for 66%, while Asia stands for 26% and North America for the remaining 8%. The pulp is used in a variety of applications, but the largest consumer is packaging, followed by niche segments like filters, electrotechnical and special applications. Rottneros is investing in a packaging joint venture in Poland together with Arctic Paper. The new factory will produce an innovative packaging solution, molded fiber trays, for the food industry. The startup is scheduled for Q3 this year, and the initial factory will generate a turnover of 140 million Swedish krona when fully operational. The growth potential for this type of packaging solution is big. Let us now turn our attention to the current market conditions in order to better understand our argument that the pulp cycle is gaining momentum. The first point we would like to make is that shipments recorded a sharp increase in January this year, and this can be seen in the top right chart. We believe this is the start of a restocking cycle boosted by demand from the European markets. The second point is that the global producer inventories now stand at 41 days of supply, which can be seen in the bottom right chart. This is an important data point which indicates that the market is in balance and that price increases are supported. The third point we want to highlight is that the market pulp price has already rebounded significantly, as can be clearly seen by the bottom left chart. Softwood pulp are moving towards $1,400 and the hardwood eucalyptus pulp has rebounded sharply. To sum up, there are clear fundamental signs that the pulp cycle will continue to improve over the next couple of quarters. To underpin the positive market fundamentals and the pulp cycle momentum, we would like to highlight the Swedish Economic Tendency Survey, or Konjunkturbarometern in Swedish. New orders have seen a sharp recovery since mid-year 2023, as visualized in the top right chart. And as of late, the stocks of finished products are in decline. Put together, these two indicators lend support for higher pulp prices. We see in the bottom right chart that expectations for continued price increase are at historical high levels. Turning the eye towards financials and valuation, we would like to highlight the following. 1. Rottneros has a strong financial position at the bottom of the earnings cycle. The equity to assets ratio stands at 66% and the net cash position is circa 100 million Swedish krona. 2. Rottneros maintained the dividend at 0.5 Swedish krona, which we regard as a sign of strength. The yield is currently at a level of 4.3%. 3. The Q4 results last year marked the cyclical earnings trough, and we forecast a 20% recovery in Rottneros operating profit 2024, which is built on a modest 3% average price increase in the power prices year over year. We value Rottneros with a DCF model, which is adjusted for the cyclical earnings swings and based on the estimated average free cash flow generation over a cycle. Our model gives us a value of 15 Swedish krona. As we mentioned earlier, historically, timing has been key when investing in Rottneros. Hence, we would like to visualize this in the bottom left chart, which depicts the forward-looking price-to-book multiple. Rottneros' 10-year trading range is 0.8 times to 1.5 times, and currently the share trades at 0.9 times, which is in the lower part of the historical range. To sum it up, Rottneros' investment case seems to be supported by both timing and valuation. Thank you for your attention and have a great day.